All
Got
right,
it.
all right. Welcome, everyone. My name is Mark Caesar. This is the Financial Freedom Through Apartment Investing, a proud affiliate of the GOB Network of Apartment Investors. We have today Mr. Brian Briscoe, which I'm sure most of you already know who Brian is. He is a multifamily legend, as I call it. Great guy. Um, he does a lot in the space. Just for starters, he is the co-founder of Four Oaks Capital. He is also the host of amazing podcast, which is I'm going to call it a shameless plug right now, Brian. It is the Diary of an Apartment Investor, and also he hosts one of the greatest meetups that I've probably been on, and I think everyone is really looking to emulate such a meetup. It is the TGIF Multifamily Investing. If you have not joined and been part of those lists that I just mentioned, please. This is, again, I'm doing a shameless plug for him, and he can do it as well. Feel free to jump on and just tune in and just come on and network. So Brian, thank you again, sir, for being here. I appreciate your time.
Thank you very much. Thanks for having me. Yeah. So I appreciate the intro and the plugs. I mean, that's great. It's interesting. I've been surprised talking about that TGIF meetup. I've been surprised at how much traction that thing got. It was the product of COVID. Everything shut down, and I realized, I'm like, you know what? I bet you a lot of people are sitting at home, wondering what to do with their time now. They just had a bunch of free time. And I started it last week of March, 2020, maybe the first week of April. I don't remember, but it's grown into something where, I think we've probably had somewhere around 200 different people who've dropped in and out. We typically have 40 to 50 people, but the thing that I like the most is, I think there's 4 or 5 people who've approached me and said, I met so-and-so through your meetup, and we have now closed on a deal, and it's just one of those things where it's like, wow, that's really, really cool. And I think it's more of a testament of, the power of networking. I think networking is huge in this business. This is a business where, it's very difficult to do multifamily by yourself. If you're gonna do a duplex or a tri or a quad, yeah, you can probably do that by yourself. But once you cross that commercial multifamily threshold, that the bigger the unit count gets, the more it becomes team than it is right? And what most of these networking events do is they put you in the same room with a lot of people that want to do the same thing that you're doing, right? Or the same thing that you're trying to do. And you have various levels of expertise. And, everybody, the nice thing is people with a lot of experience, they're looking for people who are trying to expand their business. A lot of times are looking for, people who can help, people who are chomping at the bit to get into the business. And it ends up being a really, really good combination. But, the power of networking. But a little bit about my story. Just, retired from the Marine Corps. I'm on terminal leave, which, my official retirement date is, October 31st. But I saved up enough vacation time that, I don't have to go back to work again, and I had that date on the calendar for, 3 or 4 years, probably 3 years now, where I put that date on the calendar and I said, I am going to retire on October 31st, 2021. Incidentally, that's the first day the Marine Corps would let me retire with the rules and regulations that go on. But I think before 3 years ago, I was still on the fence. It was just kind of like, somewhere around 2011, 2012 is when I committed and I said, okay, I'm going to go at least the full 20 years. And I I wasn't sure if I'd go longer or not, so I knew October 31st would be the day that I was eligible to retire, but it was about 3 years ago that I really started, looking at life and where I wanted to be and where I wanted to go, and starting to realize that, the direction I wanted to go and the direction my career was taking me were starting to diverge. They were going different directions, Um, I've moved 14 times in, the last 20 years. And it gets old. It really does. Picking up your kids and moving them across the country again and again and again gets old, and there was a lot of things that, I didn't want to do anymore, and moving was really kind of the biggest thing. I didn't want to have to pick up my kids, uproot them, and have them start all over again. But I put the date on the calendar, October 31st, 2021, 3 years ago. And, one thing that really helped me is we're doing these daily affirmations. And every morning I would get up and I had them written down on a card that went in my planner. And I would do this on the metro ride to the Pentagon. It was about an hour ride, and I had my morning routine set up. And part of the morning routine was going through these affirmations and visualizations, right? And every single morning I would read a statement, and the statement morphed over the years. The statement said something like, I am committed to replacing my active duty income by October 31st, 2021 through multifamily investing, and it was one of these things that it is a team business, but it's also a business where you have to be very committed to be able to do it, to be able to be successful. If it's not one of those things that you can just, every once in a while, do. It's not like a hobby where, maybe you have time here, you do some here, and then 3 weeks later you pick it up again. And, you really need to dedicate time to it. And the daily affirmations for me kept it in the forefront. The other thing I did is, once again, this date's on the calendar, and what most people in my situation do, people who are retiring from the Marine Corps. And when I say most, I'm probably about half, of retiring Marines will basically put their uniform on a hanger one day, pull a suit out of the closet the next day, and go to the same building doing almost the exact same job, So a lot of people that worked in the same office as me retired and then ended up working somewhere else in the Pentagon or somewhere else in the military industrial establishment as a defense contractor or something like that. And, it's something that it didn't appeal to me. So, what we really wanted more than anything else is, and I'll say what my wife wanted more than anything else, if you catch the little difference there, what my wife wanted more than anything else is to live close to her family. And we're in Idaho Falls right now. I got a couple of, nephews and nieces upstairs. We are close to family, but with my experiences in the Marine Corps, I spent 20 years trying to shoot down airplanes. All right, shoot down airplanes and, do other things, but it's not a skill that translates well to, civilian jobs. And here in Idaho Falls, there's only one airport. And last I checked, they're not looking for anybody to shoot down airplanes. So, in order for me to get a job here and be able to live here, there weren't very many options. Idaho Falls is a city of about 65, 70,000 people. There weren't very many job options. And so this was multifamily for me was a way to provide the lifestyle that we wanted to live. Okay, close to family, regardless of location. And basically what it took was every morning focusing on that statement. I am committed to replacing my active duty income. I knew that's what I needed to do to be able to step away, was to replace that income stream, because like a lot of people, I was addicted to that twice a month paycheck. The 1st and the 15th every month, that paycheck was hitting the bank. And like a lot of people, I didn't want to give it up, and that's part of the reason I stayed in the Marine Corps 20 years, because, it was a constant stream of income, but it came with a high cost, and that high cost was doing what the Marine Corps told me to do, which for, 16, 17 years was okay. But at some point it became, maybe a little too much for my family. But so what it took and how I did it is, I took a real serious look at my schedule. Okay, what do I do every single day? And where can I find extra time? All right. And that was really the thing that made the biggest difference. Actually, the thing that made the biggest difference was those daily affirmations. But the second thing was being able to carve out some time. All right. And I started realizing I took the metro to the Pentagon every day, which was about 50 minutes sitting in a metro car, with a phone or an iPad. And I bought an iPad. It's usually within arm's length, but it's not today. But I bought an iPad just for the metro ride, so I could, at first it was learning. At first I was loading books about multifamily. I was loading coursework about multifamily. Paid curated content I was loading on that iPad. And at first it was learning as much as I could, using, 50 minutes on the way to work, 50 minutes on the way home, to learn as much as I could about multifamily. And then I was also setting aside from roughly 9 p.m. to 11 o'clock every night. I'd go to bed at 11 o'clock, wake up, 4:30, 5 o'clock, exercise, go to work, and rinse and repeat. So, and then the other part that I carved out were my lunch times. It's very common. One I guess perk of the Marine Corps is they give you a long lunch. Typically it's an hour and a half, which is more time than anybody needs to eat. But kind of the unwritten expectation is you eat, you do your workout, you come back, and you're good. And so I did what a lot of good Marines do. I went to the gym every day, and turns out the gym had a really good Wi-Fi. And it turns out that there was a table at the back of the gym where I could set up my shop, and I could spend, 30 minutes tapping out emails, doing a 30-minute workout, grabbing something to eat, and then, getting back to the office. So I looked for as many spots in my daily schedule that I could to be able to dedicate time every single day to get me closer to my goal. And that ended up being, I think in a lot of things, a little bit of effort every day is a lot better than, a Herculean effort once a month, so I was putting in a couple hours a day towards the goal. And it's not something that happened quickly. It's still, even with 3 to 4 hours a day, 2 hours on the metro, maybe a half hour, 45 minutes at lunch, and maybe an hour or two in the evening, 3 to 4 hours a day in addition to my full-time job. It still took several months. It took us a year. It took me a year to close on my first property. But it was just that constant daily effort. And so a couple of the catalysts that happened, at first, I look at these events like this that we're on right now. I look at something like this, and I kind of look at the different RIAs in the DC area, and I'd be like, I don't need to go to that. I look at the speaker, and I'd be like, I'd Google the speaker. I'm like, oh, hey, he was on a podcast here. I don't have to go to the RIA. I can just listen to him on the podcast. And I started realizing that meetups like this it's more than the person who's talking. Okay. It's the other people in the room that are important. Okay. The other people in the room, the networking is what's really pushed my business forward, was being able to go to these events. And some of the biggest mind shifts I had were meeting people, talking to them about what they've done, and realizing, hey, his story is not much different than mine. There's a guy I met, retired from the Air Force. His last job was at the Pentagon. He retired in 2017. I met him shortly after he retired, and it was meeting him was like a validation of everything that I thought of and planned. I had just barely started this every morning routine and the metro and carving out time. And, he's like, yeah, I spent the last 3 years at the Pentagon, working nights and weekends, building multifamily business. And now I have, X amount of doors, and I work in this business full time. And it was just like, if he can do it, I can do it, and I think that was the moment I decided to really burn the bridges, was, talking to somebody else and thinking, you know what, he seems like an average guy of average intelligence and average height, and doesn't seem like, I just did a Google search. He didn't win a Nobel Prize or anything, wasn't a Rhodes Scholar, never made it to the Olympics. So I think he's pretty average, and he did it, and so, stuff like that really, really helped. And so I started focusing on these networking events. And at these networking events, I would always go into the networking events with a need. Okay, what is it that I need? Okay. And at first it was potential partners. All right. And I think that's huge. Zoom meetups are a little different than the physical meetups. When you go to the big physical meetups and there's 20 or 30 or 40 people there, I would go in with the mentality that, I have a certain need that I need fulfilled. And if I started talking to somebody and I realized that they weren't going to help me, they weren't the right person to fulfill that need, I would, as politely and kindly as I could, try to ramp down the conversation and go talk to the next person, because that's why I was going to these events with a purpose in mind. This is what I need from the event, and at first it may have been potential partners. I'm looking for people who are potential partners in this business. And, once I linked up with, my current partners and realized, okay, I've got the partner thing. The next thing that I was looking for was, okay, well, we're looking for deals. Now we're going to need money, so my focus at these events were the passive investors. And now when I went and talked to people, it was the passive investors that I was looking for, and a lot of these people that I've met at the meetups have, subsequently invested with us, and so it was just a matter of, I think, focusing my time, focusing my efforts on what that next thing was that I needed to get the business going forward. Every once in a while, and I'm sure this happens to everybody, every once in a while I'd sit back and I'd look at the big picture and it would just seem overwhelming. It's like, okay, so I want to close on a 100-unit apartment, and okay, I'm going to have to raise $3 to $5 million to do that. I don't know anybody that even has $1 million or $500,000. So, I'm going to have to cobble together, 100 people with $50,000 investments. And, it's just like, it seems super overwhelming. But, what I learned is just to take that big picture and break it down. Okay, what's the next step? Okay, what's the next step that I need to do? And sometimes I break it down to the next 3 steps and then just say, okay, well, I'm just going to take that next step and keep on pushing forward. And also that's also one of the biggest reasons, the biggest benefit of partners, is I bring certain skills to the table. And 3 years ago, I thought I'd be terrible at raising capital. I really did. And, just the idea, I didn't think I knew anybody with money to invest, number one. And the idea of trying to get people to invest with me just it didn't sound fun. I'm not a salesman. I kind of abhorred the sales jobs growing up. It was just like, okay, I never want to work in sales. I never want to work in fast food. Okay. I made that decision when I was like 14 and I stuck to it. Right. But, it so I ended up looking for partners that could fill that role. Turns out that raising money is not as hard as it sounds. It really isn't. But, I kind of learned that along the way. But, end of the day, I started looking at, okay, who do I need to partner with? I need to partner with people who can, fulfill X, Y, and Z needs because I've already got A through W taken care of or whatever, right? So, there's a lot involved in multifamily. All right. I mean, you have to find deals, you have to underwrite deals, you have to, submit offers, you have to work with, a bunch of third-party people to make sure that your estimates are right. You'll be talking with lenders and property managers and, an insurance broker and like all these different people, before you even get something under contract. I mean, once you get under contract, I mean, that's where the games really begin. It's the due diligence process, the negotiation, the getting the vendors and the contractors out to the property. It's a lot, but what I found is you get a couple of partners and it's very manageable. All right. It's very manageable. So, along the way, I first met a guy named Eric Shirley, and he's our current director of acquisitions right now. And what was kind of interesting and maybe a little bit ironic about Eric is I agreed to partner with him, but when I was looking for a partner, I was looking for somebody who could complement me. And what was ironic about Eric is his skill set and my skill set are almost identical. All right. Why did I partner with him? It's a great question. I'm glad you guys asked, but we found out, we had met at meetups like this. We had talked to each other. We had been on phone calls together. We'd exchanged emails. And, in one of our interactions, we realized that we had put offers in on the same properties more than once. That we knew each other, but we didn't know we were competing. We didn't know we were talking to the same brokers. We didn't know we were underwriting the same properties. All right. So why did I partner with Eric Shirley, a guy who's, conventional wisdom says you partner with somebody who complements your skill set. Eric didn't complement my skill set, but we decided to start collaborating because collaborating was better than competing. And, I'm actually very fortunate that, he suggested collaborating because I never would have, because I was looking for somebody who could raise capital. And he was more of a deal finder, more of an analyzing guy, more of a numbers guy, right? So yeah, looking at that, when he suggested collaborating, I'm very, very grateful that he did, because, that wasn't on my mind. It was just a matter of, well, we're competing. How do we not piss each other off, but we started collaborating, and turns out that, he was really good at what he did. He's really good at numbers. He was really good at underwriting. And, at first I thought I was better than he was, but, very, very shortly after, I'm like, man, he's good. But we ended up working together underwriting properties, and we brought in two other partners that were, ended up being pretty good at raising capital. So, long story short, it's really, I think that the things that have really mattered to me going forward in this business was, number one, setting aside time every single day to learn and take action. All right. So it wasn't just, me reading books and podcasts. It was me talking to brokers, and there were times where, I had goals, when I looked at the next thing I needed to do, there were some times where it was like, okay, I think I've got enough knowledge. I don't have any deals to underwrite. So there were times where, okay, next step for me, call 10 brokers, and every week I'd make a goal. Okay, I called 10, didn't get much traction. I'm going to call 10 more, but setting aside time every day to learn and work towards the goal, taking action, and networking is really what kind of kick-started, the business for me. And those three things put me in contact with the people who ended up being my partners. And because I had done so much to learn the business, and because I had taken action and underwritten properties and developed my skills, by the time I met Eric, I had something to offer. I had underwritten more than 100 properties. I don't even know how many, but more than 100 properties by the time that I met him. And I had something to offer because I knew how to underwrite. I knew how to do the financials. I knew how to do the numbers. I knew how to comb through a T12. I knew how to do a comparative market assessment. I knew how to validate the numbers that the brokers gave us. The little tips and tricks. I had rules of thumb to use, yeah, but I think more importantly than the rules of thumb, I knew how to make sure those numbers were good. And so when Eric and I met, I was a viable option for a partner. I had something to bring to the table. And once we started working together, it's amazing how much traction we got together. Because I don't know if this really made a difference. I like to think that it does. But before I joined forces with somebody else, I was calling the brokers and using the word I. Okay. I am looking for an apartment. Well, most brokers know that it takes a team to tackle an apartment building. Most brokers know that one person is not going to be able to, typically one person can't buy a $5 million, $8 million apartment complex. It takes more than one. And so I think part of it was I started using the word we because there was another person, attached to me. And, the power of the team, I don't think it's coincidental that, 1 or 2 months after Eric and I, decided to partner, we found our first property. We got our first property under contract. And, that ended up being, a whole story in and of itself. I can honestly say that I've learned more about the process getting that one. It was actually a portfolio of 2, getting those 2 deals across the finish line than I think you could ever learn reading every single book on the subject. That said, fast forward, a couple years later, I'm at the point to where my active duty salary is going to run out in 2 months. 2 months from tomorrow is my last paycheck. Actually, 2 months from Wednesday is going to be my very last paycheck. And I'm not worried. I'm not. My active duty paycheck runs out, and my retirement paycheck is about 1/3, but I know where the money's coming from for the next while, right? So it's definitely a business where you can get to where you want to get. It's definitely a business where with effort and with time and putting together that consistent daily effort, you can do big things in a couple of years, right? So something I've heard, and I'm sure I'm screwing up the quote. Most people will overestimate how much they can do in a year, but underestimate how much they can do in 5. And I found that to be 100% true because, in the first year, I thought, yeah, I'm going to buy like 4 properties in the first year, and maybe by the time I hit the 5-year mark, I'll have bought this many. But, the first year I didn't go as fast as I wanted, but, I started picking up traction, picking up steam, and it ended up being kind of an exponential situation where, the very first year we closed on roughly $5 million worth of property. Second year we closed on, I should have had these numbers prepared, probably $15 million worth of property. And 2021's been a little slow for us. Only $8 million, worth of properties, but we still got time. But anyway, that's each one of these properties. And this is the lovely thing about syndication is, even if you're starting in a point where you don't have a lot of cash, it's helpful to start with, money on the sidelines so you can invest in your own deal, so you can pay for those upfront costs, the earnest money, the due diligence, all the other risk capital. All right. But, even without that, you syndicate, you put in the time and the effort, and most syndicators are walking away with roughly 20% ownership in an apartment complex. We own 9 apartment complexes, and between those 9, I'm one of 5 partners, but between those 9 apartment complexes, my smallest ownership percentage is 4%. My largest ownership percentage is 20. So, I've got somewhere between 4 and 20% ownership in 9 different apartment complexes, and that adds up, and it adds up, and it adds up fast, so it's something where if you're able to invest your own money, it compounds faster. But even if you're not able to, and if you're not at a point where you can put 50, 100, or $200,000 into your next deal, you can still amass quite a bit of wealth over time. But I mean, that's kind of very broad brushstrokes. If anybody wants like nitnoid details on a specific point, kind of guide me, push me in the direction you want me to go.
Man, that was truly amazing. I definitely took a ton of notes, and a lot resonated with me for sure. I know one of the things that you alluded to is networking, and as far as partnerships are concerned, because I'm currently reading Hunter Thompson's book, and he makes a quote of what he calls a $2,000 night.
That one?
Yep.
Good book.
Yeah, great book. He calls it a $2,000 night. So, and he says whenever he goes to a meetup, he wants to find someone that's going to pour in $2,000 worth of value into his business. And if he does not find that person, he does not really spend time there. He wants to make sure that he goes in with a strategic plan, and he leaves knowing that, all right, I've gotten $2,000 worth of value that can catapult my business to the next level. And when you're speaking on you and Eric, and I've spoken with Eric a while back, great guy. And when you're, basically breaking down the example of how you guys don't really, you were looking for one thing, but he came along and you guys were identical. That quote just ticked in my head. And it's very important because people were always looking for what, someone to compliment or to take away something from us. But that person that, someone might be next to you and they might have exactly what you need to help push you forward. And you might miss that opportunity basically. So it's always good to, have a structured plan and know, okay, I'm going in I need help with this, and I need someone who can help me get there. Let's find ways to collaborate. Let's not compete against each other. And this is what I preach on this platform as well. How can we connect with each other? How can we collaborate and get to the next level?
Yeah, I think Eric was more than a $2,000, that was like a $2 million partnership, and hopefully more. And it's, I think what the takeaway for people for that one is take chances with people. Like I said, he wasn't the type of person that I was looking for. He's a great person, great guy, and he's super good at what he does. But like I said, I was stuck on the mindset of, I'm a deal finder. I need to partner up with a capital raiser. And so I never considered him. I had this very narrow focus on what I thought I wanted. But end of the day, I ended up taking a chance. He took a chance on me and I took a chance on him. And at some point you have to take a chance on someone else. It's the perfect person is never going to show up. All right. And if they do, get on your knees and thank the Lord, because, it ends up being, Eric ended up being the perfect person, but I didn't realize it at the time. Right. So, take a chance on other people, look for that $2,000 person. And Mark, going back to what you said, 2 years ago, there were dozens of meetups in the DC area, dozens of meetups. And I would go to any meetup once. All right. But I would look around at the people in the room. And if there were high caliber people in the room, I would keep going back. If the room was full of tire kickers the first time I showed up, or there was like 3 or 4 or 8 people and with almost zero experience, I wouldn't go back, And so it was just a matter of, which networking events are worth which networking events are going to help me get to where I need to go, and I think once again, that's more a function of the quality of people that come to the group than it is, the guest speaker or the host. I mean, guest speaker and host are important, but I think it's probably, cumulative total 20% of, what you really need. The other 80% are from the people in the room.
Most definitely, most definitely. Now I know you said your focus was when you initially started, you were looking for someone who can raise capital. So what is it that you do right now within your team at Four Oaks?
Yeah, so good question. So up front, my job was finding the apartments. All right. And the first three, we've closed on 9 right now. The first 3 were ones that I found and I negotiated and, got the contract. Okay. Number 4 and 5, I was involved, but Eric was the lead, so at that time, every time he found something, he would send me his underwriting and I would look it over and, did you think about this? Did you think about that? Did you think about that? And it was basically, he wouldn't put an offer in until I put a thumb in the air. Right. So it was kind of a twofer, but basically what happened, my job at the Pentagon ended up getting really, really busy. Actually right when right before COVID shut everything down, my Pentagon job got super busy. I got transferred to a different spot and I was working ridiculous hours. And it's hard to be responsive to brokers when, you're walking into the Pentagon before 6 a.m. and walking out at 7 p.m. And that was my life for like 4 months. So what we ended up doing is, Eric ended up taking the reins, so to speak, of our acquisitions. And I started working on our educational platform, and that's the thing that I've been working on most is, trying to help other people do what we're doing. The podcast was part of that. The podcast, there's a reason we have 2 people on the podcast, somebody with experience and somebody without experience, because, we want to help people get to the next step. And so, my role, besides the podcast, is I run our educational network, the Tribe of Titans, which logo looks something like that, right? The Tribe of Titans. But so right now, I'm knee deep in education and helping other people do what we've done. And, people might ask, well, why are you doing that? Well, we end up finding a lot of win-win scenarios, so for example, one of the plank holders in the Tribe of Titans, I actually knew her long before Tribe, we even developed that, but she has an apartment complex under contract right now, and she needed help tackling it. So she turned to us and said, hey, I need your guys' help a little bit. And one dirty little secret, if you guys haven't figured this out yet, is you have to get a loan, you have to have somebody experienced on your team. And so, part of the reason, first of all, before I joined the Marine Corps, I wanted to be a teacher. I've always enjoyed teaching. I've always enjoyed helping other people. All right, that ship sailed a long time ago, but so I enjoy teaching aspect. But the other thing I've realized is we can set up a lot of win-win scenarios, not just give other people information, but help people walk through the first steps. So and if that means putting our name on the line and signing on a loan with somebody, we're willing to do that too. So but yeah, so my main role is the Tribe of Titans. The Friday meetups was another thing that we designed with the Tribe of Titans in mind, bringing good people together. And we've got a lot of events in there. So, if you look at my calendar this week, most of the things on my calendar this week are very much related to producing educational content for the people in the Tribe of Titans. I also have a property 2 miles away that I just got some financials for that I'm going to underwrite and make a pass at. But, but yeah, my focus has been the educational program. And, when a local deal comes across my inbox, I'm still going to be underwriting that, and I'm still going to be, trying to lock up more properties.
Most definitely. You mentioned that when you look at certain tasks and if they're too big, you break them down into smaller tasks. Can you give a little more in-depth explanation as to how you do it and why?
Yeah, I mean, so my formal college training was in math. All right. And, it's, you get in the upper level math classes, and that's what you have to do. That's how I learned how to do a lot of things. Is you have big complex problems, but turns out that most of these big complex problems can be broken up into a series of smaller problems, so, when you're underwriting a property, sometimes, I started using Michael Blanc's syndicated deal analyzer, and it's a very complicated product. There's like 18, spreadsheet tabs, and, it's just like, oh my goodness. But if you can learn how to break that down into simple steps, hey, there's one place for lending, so you kind of compartmentalize things. And, I had my own routine when I was underwriting properties of how I would do things. So I think breaking things down into routines really helps, so, so for example, to make things easier with underwriting, I would start out with rules of thumb, so you get a T12, you get a year's worth of financials, hopefully from the broker when you're underwriting a property. And I would compare what was on the T12. Okay, come here, sweetheart. You come say hi to everybody? Oh, okay. Yeah, so anyway, I had rules of thumb that I would go by, but I compare what's on the T12 to those rules of thumb, and just be able to say, like, okay, it looks like they're a little low on insurance costs, or they're a little bit low on, the other costs or whatever. Maybe they're a little high here and we can trim some fat. But then I would take it to the next step, and I would start trying to verify as many numbers as possible, so I didn't have to do it all at once, so when you're looking at the potential rent bumps, the broker is going to put rose-colored glasses on and tell you that the property's, that's a C class in an A class area, when it's like a D class in a F class area, right? But so the next thing I would do is, okay, I had a separate spreadsheet for this, or a tab that I would add to a spreadsheet where I'd get on apartments.com or Zillow or Zumper or any one of those, rent the places where you can look up what apartments are going for. And the next thing I'd be doing is just going through and looking at the other rents around, comparing, amenities and features and whatnot, and trying to get, so yeah, I'd even break down the underwriting to several tasks, and it was just a matter of going through line by line. When I'd get to the property tax, property taxes, I'd call up the appraisers, not the appraisers, the assessors, the county assessors every time. So, it's just a matter of, it is a lot to put together, but you break things down into processes, and you just do one after the next, and then you do the next, and as you go through, many of these, you end up getting your own way of doing things. But it's, you can apply it to really any process in multifamily, but that's how I would do it for underwriting up front, was just, okay, well, first I need to do this, now I need to verify that, now I need to check up on this one. And but yeah, you just break it down into simple, smaller tasks, and then once everything's done, you have a lot more confidence in that number that the spreadsheet spits out than you did before.
Awesome. I will open up the floor. If anyone else has any questions for Brian, feel free to pose them now.
Brian, I have one question.
Yep.
So number one, thanks for your service. Really appreciate it. I'm sure I speak for everybody here. Absolutely. my question is regarding when you were still in your active role at work, as well as doing a lot of this stuff, as you said, making time throughout the day. I'm just curious, I'm in a similar position myself now, working in finance during the day, and then trying to find time wherever I can to make a lot of the same, to-dos that you were doing, it seems. And I'm just wondering how you were able to kind of toe the line. I'm at a point, myself and my partner, where we've kind of exhausted a lot of our primary contacts, friends and family, for our capital raises. And now it seems like in order to get to the, larger deals, we're going to have to develop more of a presence or more of a, I guess, credibility online. And I'm just curious how you toe that line between, your employer and W-2 employers are a lot of things, but incubators for entrepreneurs or supportive entrepreneurs, probably not one of them. So how you did that?
It varied depending on, who I worked for. In 3 years working at the Pentagon, I worked for 4 different people. One of my bosses was very entrepreneurial and had a couple of businesses on the side, and he was very supportive. I had another boss that, had the idea that, I should dedicate my whole entire life to the Marine Corps. And if I didn't wake up, drinking Marine Corps green shakes, that I was doing something wrong. So, I mean, towing the line was difficult. One thing I didn't talk a lot about real estate at work up front, and I was a little worried about how people would react because, to be honest, there's some very closed-minded people in the military. And, like I said, some of them, like my last boss, has the opinion that, there should be no side hustles. The Marine Corps should be, just like, okay, but yeah, so as far as towing the line, I would try to compartmentalize, as best as I could. Work was for work. And when I was outside of work, it didn't mean that, I wouldn't leave at, 10 o'clock, walk out to the Pentagon courtyard, take a phone call for 20 minutes and walk back in. But, that you still have to do what you're supposed to do for your W-2 job. Right. And I've talked to a lot of people who have a hard time towing the line. One of my partners got fired from his job. He was planning on quitting, but he ended up getting fired a couple months before he planned on quitting, which kind of threw a wrench into his timetables. But you really have to understand, what your company or whoever you work for needs from you, and still continue to meet those needs. And at some point, and there you'll know. I think everybody will know at some point there's going to come a time where it's just like I've got to do one or the other, and if the Marine Corps would have allowed me to get out a year earlier, that time would have come up a year ago, because that's about the time. It was about this time last year where it was like, I really need to get out. I really need to spend more time on this real estate thing. Cause we started piling on properties and getting more and more work. But, really, I think just be cognizant of, trying to satisfy 2 bosses, and if you're Christian, there's that scripture, you can't serve 2 masters. And sometimes that's what it felt like I was doing is trying to serve the 2 masters. And it's difficult is the answer. So, I'll be honest, my performance at work started declining. The more traction that I got in real estate, the more I started realizing that, I'm making this much at the Marine Corps. And by April this year, I made more than my entire year's salary through real estate, and I'm just scratching my head. I'm like, why do I have to keep on coming here? And my performance ended up suffering a lot. And if that was a job that I could get fired for, government jobs are difficult to fire people, I probably would have been fired too. But I may not have been the best example of walking the line, but just a matter of, do it for as long as you can. And at some point, you just got to be honest with yourself and say, it's time. It's time to hang up my uniform, hang up the boots, or put in my 2 weeks notice.
Thank you.
I do have a question for you, Brian. You mentioned earlier in your presentation that things like capital raising is not a difficult task. So my question for you is, why is it that multifamily to some people seems to be such a difficult task, especially when it comes to capital raising? Why are people putting so much into it? And you said that it is something very simple. Can you elaborate on that, please?
It's a mindset issue. What are you trying to do? Are you trying to get people to give you $50,000, or are you providing something that they really want and really need? Okay, we're providing an investment opportunity that could potentially double somebody's money in 5 years or less. All right, we're providing income, passive income for people, which is something that a lot of people want and a lot of people need. And I think for me, the biggest thing that made a difference was that mindset shift to, less I'm trying to get people to give me money and take a chance on me, to I've got a product that everybody should have. We can invest. One of our best performing properties so far has doubled in value in 18 months. Now, granted, we put a good amount of capital into it, but as far as purchase price, to we're entertaining offers right now, but we've got offers that are twice as much as we bought it for 18 months ago. So really it's more of a matter of perspective, where I have a product that everybody needs and a lot of people want. And so it's more of a matter of what your mindset is. And if you really believe that you have a product that is good for a lot of people, that can help people with their investment goals, that's what you're going to be focusing on when you're talking to people. It's not going to be like, hey, I've done all these really, really great things. Please, please, please invest with me. On the flip side is, I've got what are your investing goals? Oh, really? Well, guess what? The product I have does exactly what you're looking for. I can give you a very low risk return. We can provide 15 to 20% average annual returns. How does that sound? And the answers are overwhelmingly positive. It's like, yeah. I mean, if you got something that can give me 15 to 20% average annual returns with low risk in a physical asset, yeah, absolutely. So really the trick to capital raising in my head was just changing my mindset from, I need your money to help me out, to I've got a product that's really going to help you.
And does credibility play a part in that equation?
Yes, it does. But the caveat to that is you can borrow credibility. Okay, you don't have to have your own credibility. So like I said, this woman that we're partnering with, she has never owned a multifamily property before. She's invested passively in several, and she's invested with us too. But when it comes time for her to talk to her investors, guess whose credibility she's leaning on? All right. She doesn't have the credibility, but I'm going to sign that loan with her, and we've got almost $40 million worth of real estate. Okay, we've been in this business for 3 years. We're this close to coming full cycle on our first 2 properties. So we have the credibility, and if you can find somebody with experience and lean on their credibility, you can answer that question. So depending on who you're talking with, some people are going to invest in you because they like you. All right. But there's other people that are going to want to see that credibility, and the further you get out from your close circle of family and friends, the more that credibility is going to matter. All right. So one of the most common questions I got on our first capital raise was, okay, this is your first time doing this. How do I know it's a safe investment? And I would always point to the experienced partner that we had coming in on the deal with us. Well, I don't have any experience, but, and I would talk about the coaching program that I was in. I paid a lot of money for a coaching program. And I'd say, hey, I've been mentored by so-and-so, and my mentor has 2,000 units valued at about $40 million or whatever the number was at the time. I don't remember. 2,000 for 40 million is really low. But don't quote me on that. But yeah, I mean, I was able to. That was probably the most frequent question that was asked of me, and I was able to satisfy it by saying, my teammates, have this. My teammates have done that. Between me and my partners, we've invested passively in about 1,000 units. And my mentor, who's coming in on the deal with us, who's partnering with us on this deal, has 2,000, 3,000 units or whatever. So absolutely, credibility matters. But there's ways around, you bringing credibility to the table. I mean, it's one of those chicken and egg things. How do you get credibility if you don't have any credibility? The answer is your partner.
Thank you for that. Thank you.
Yeah.
Does anyone else have any other questions for Brian? Let's not be shy now, guys. All right. I guess no one else.
Hello.
Go right ahead, sir.
Mr. International.
Hey, Brian. How you doing? First
Wow.
of all, I don't have a question. I just want to say, I just want to thank you for your service, number one. And number two, thank you for putting on that TGF Fridays for almost a year and a half now. Mm-hmm. And just want to say thank you, man. Thank you very much. Appreciate
Thanks,
you.
Lawrence. I appreciate you. And I don't know why I didn't think about this earlier, but this should be your new sign. That was my I was a Leighton Lancer in high school, but I think this is the new you. Mr. International, and everybody's going to be flashing this sign right here, the double L's here. So
thank you.
There goes your new logo.
Yeah, every TGIF is going to be, hey guys, Mr. International's in the house. So,
thank you.
Yeah.
Thank you, Brian. Thank us for this. Has been a great session tonight. Thank you very much for the presentation too.
Hello, this is Alana. I do have a question, and again, thank you for your service. Appreciate this time that you're spending. Wanted to talk about, you said once you get the deal, right, that's where the rubber meets the road. Are there any tools that you use to, I guess, monitor the monitor, right? So you're monitoring the program manager, the property manager. Any tools that you use, any metrics that you look at that are, I'm sorry, my kids are screaming in the background. Any metrics that you look at that are important? If you could talk a little bit about that.
Yeah, so the tools, when we first started, just like everybody else, we were brand new, and I got a couple of tools from my mentors, so we got a due diligence checklist, or actually a closing timeline checklist that he gave us, which was more than just a due diligence. And he also gave us a KPI report, and his KPI report was extremely complex. What we found is, it really came down, as far as managing the managers, we had to sit down and think, okay, what really matters to us? What are the most important things with this property? And for us, the answer was NOI. I think for most people, when you look at, the multifamily business, what matters most is the income line, right? So we started looking at the things that most directly influenced that line right there, and those ended up being our KPIs. So we started looking heavily occupancy. All right, and not just occupancy. Occupancy is probably our biggest metric, because if you're full, you're probably leaving money on the table. It's one of those catch-22s. But yeah, occupancy is number one. Time between turns ended up being something that we tracked. How long did it take between a tenant moving out and the unit being move-in ready? We wanted to narrow that time down as much as possible, and then getting a new tenant in. So not just the time from one tenant to a new tenant, but both of the things. How long did it take to get a new tenant in, and how long did it take to get the apartment rent ready? Because both those are important. So what we look at more than anything else, you know, and thinking of my dashboard, occupancy, collections is huge, and the offside, the opposite of collections is our bad debt. So occupancy, collections, bad debt, and then we track leads, you know. So if we have 3 vacant apartments, you know, how many leads did we have in that apartment in a given week? How many of those leads turned into showings? How many of those showings turned into applications? How many of those applications turned into leases? And that's really bottom line. That's really what we track, because those are the things that move the needle the most. You know, having a unit vacant for too long is, you know, I'm not gonna say kiss of death, but it's not good. So we wanted to minimize the amount of vacancies we had, and the amount of time units were vacant, you know, when tenants moved out.
Appreciate it. Thank you.
Yeah.
I have a question. So during due diligence, you discover there's, you know, $500,000 in damages you weren't aware of. So you say, hey guys, I think we need to retrade. And your team's like, oh my God, retrade. No, we'll get a horrible name amongst the space. And so I was talking to somebody else, and I heard that there's a way to do a credit. I don't know what this credit magic is.
It's retrading.
But it's not called a retrade.
It is. I mean, it's like, okay, do you give me $50,000 off the purchase price, or do you give me a $50,000 credit towards the purchase price? I mean, for all intents and purposes, you know, it really only matters to the bank, you know, because it reduces the amount of capital you have to bring to the table, and it makes your ratios a little nicer, right? So credits are better than, you know, getting the sales price dropped. But yeah, I mean, your reputation is something you have to guard, and you don't want to be somebody with a reputation of retrading, because, you know, it's just
that it's 10% of the deal.
Yeah. Do you want a little W on this one deal, or do you want to string together a bunch of W's? Now, here are the things that I would retrade on. You know, $500,000 in a $5 million deal is significant, but if the owner didn't disclose something, we retraded once. We tried to retrade on 2 deals. On one deal it worked. All right, the owner told us the roof was about 8 years old. Okay, and we're like, okay, we've got a 5 to 8 year hold, we're probably not going to have to replace the roof. During due diligence, we get up on the roof, we look around, and we're just like, there's no way this is an 8-year-old roof. Call a couple of roofing companies, and one of the companies came out. The guy looked at this and said, no, this isn't an 8-year-old roof. I put this roof on 22 years ago.
Oh my goodness.
Okay. That's a retrade situation, because that's a big ticket item, and the owner wasn't forthcoming with the information. The owner gave us an 8-year number, and it was 22 years. And so we went back to the owner and we said, just by happenstance, we found the roofer that put that roof on. It's 22 years old, not 8. You know, that's something where I think a retrade works, because we were given wrong information. Yeah. You know, and so, you know, and it's a big ticket item. You know, if it's stuff that's visible to the naked eye, if it's things that you probably should have known about. So I would say
it's collapsed lines under 2 buildings.
Okay. That's probably worth the retrade, because it's not visible to the naked eye. It's not.
And we only found it because they used cameras on the scopes.
Yeah. Yeah. That's in my mind, I would say what you should not retrade on. You know, if you're buying a 40-year-old building, there's going to be a lot of deferred maintenance. And if you go in and say, oh my goodness, there's a lot of deferred maintenance, and you try to put a retrade in, it's like, it's a 40-year-old building. Of course it has deferred maintenance, but, you know, collapsed lines, sewer or the main line, the water source.
It's drain lines.
Drain lines. Okay. I mean, either way, I mean, we just replaced 2 main lines, and those are expensive. You know, you got to get a backhoe in, they dig up the
underneath.
With sewer, they're going to have to dig up a whole lot. With the main lines, it's actually a little easier because you don't have to dig up as much. You know, you find the leak, you connect it. But
one building was already redone in 2017, and it was 75,000.
Yeah,
in 2017.
Yeah, I mean, depending on the geometry and configuration, you may have to get jackhammers out and break through concrete. You know, if you're breaking through concrete, that's expensive. And then you got to put everything together back when you're done. You know, and you got to get backhoes out, and the backhoe is going to dig up, you know, a big trench from the property to the sewer line in the street. And there's not just the expense of doing that, but putting everything back together, getting the landscaping back up. You know, they've probably interrupted your sprinkling system if you have one. Yeah, I mean, so a lot of the cost is putting things back together. I mean, just off the cuff, that's something that I think is worth retrading on, just because it's expensive, and it's something that
The
depending on
electrical
how.
has a lot of issues too,
Mhm.
but what our thoughts are is that electrical, it's stab lock
Mhm.
and outside panels that aren't up to code, like safety issue, not up to code, like they don't even have
Yeah.
the covering on them. But but the thing we're thinking is, because you can still get insurance for stab lock,
Mhm.
that's going to be just like not even an issue. But the plumbing thing, nobody could have seen it, and one of
Yeah.
them, like the scope wouldn't even go into it. So one of them, it has to be cleaned out before it can even be scoped, and that's not one of the ones that we know is collapsed.
Mhm. Yeah. I would imagine if you go through the due diligence, but if they gave you like the general ledger, they gave you like the work history, there's probably a lot of plumbing problems. They probably had a plumber out there a lot trying to clear lines. Probably had a lot of backups, but end of the day, that's
Drainage
probably,
has been a real issue.
what's that, maintenance?
The drainage.
Drainage, yeah. That's one that you probably would have a decent shot. I think it's significant enough that you have, I mean, once again, there's two separate ways of looking at it. You have to guard your reputation. You don't want to be you don't have a reputation for retrading, but if it's significant enough, you know, you may want to, you know, try to renegotiate something, you know, a credit or something on there. But yeah, it's not going to be cheap either way.
Yeah, because I mean, it's a skinnier deal already.
Yeah.
That's why we were kind of like, man, this
Well, and here's the other thing I'll say about retrading is you have to be willing to walk away. Okay, if this is a deal breaker, then you retrade, and if you don't get the retrade, you have to be willing to walk away. All right, and if you're just retrading to get better numbers and you're still going to go through with the deal, don't even retrade. Okay, but if it's big enough where it makes your numbers to the point to where you can't go through with the deal anymore, okay, that's where you retrade, and you just put your cards on the table and you say, look, here's the deal. The returns, the number we paid for it was a stretch at the beginning, and now we have to come up with $150 or $250 or $500,000 more to pay for these sewer lines. I can't afford it. This is no longer a good deal. We don't think we can make money. The juice isn't worth the squeeze anymore. So retrade or we walk.
Yeah.
And hopefully you don't have a lot of hard money down.
100,000.
Yeah. So that complicates things a little bit, but you still, end of the day, I think you have to be willing to walk for the retrade to work. So, you know, lose 100,000 or try to figure out how to come up with an extra 500,000. It's like, you know, not a fun situation.
No.
We're gonna do it anyway, so I guess
I
that
know.
answers the question.
Jason's like, well, we're going to do it anyway. So I guess that answers the question.
Yeah. So,
Well, because it's our 100,000. Nobody else.
oh yeah.
Nobody else would put up the risk capital. They're willing to pay for the due diligence. They're willing to pay for the lines to be scoped. They're willing to pay for all the other pieces, but nobody would put up risk capital.
Yeah. That's, ooh.
Yeah. Fun stuff.
Are they willing to reimburse you?
I don't think so.
Okay. I mean, with just with our company, We've taken turns putting up risk capital, but we're together for the long haul. We weren't. I mean, I think you guys just came together for one deal, which is a little different. We always told each other, hey, whoever's putting up the risk capital will make you whole at the end, and we did back out of one deal, and the risk capital that we lost, we shared evenly across the board. So, but we made that agreement before we even started doing anything, where it's like, okay, you put up the EMD on this one, no big deal, or we'll split the EMD on that one, no big deal. But yeah, it's hard money. That complicates things.
Yeah. I mean, I think there's plans for us to continue as a team. But it was Jason and I put in an LOI, it was accepted, and we were like, shit.
Yeah. Like, what now? No.
Yeah.
Yeah. So yeah, that's really a tough one. And I think it's a big enough deal that it's not going to kill your reputation. All right. And when you take a couple of steps back and you look at, this broker, you want this broker to want to transact with you again. All right. So if you're retrading over insignificant things, the broker's not going to want to transact with you again, because he doesn't want to have to go to the seller and say, they're asking for another $100,000 because of the bricks are falling off the front, or something stupid like that. Right. But, if it's a big enough deal and you guys handle it well, then, I mean, really you want to maintain a good relationship with the broker, make sure the broker wants to transact with you again. And, make sure the broker is not going to call his other broker friends and say, wow, these guys just tried to retrade for $500,000, and then all the other brokers know, hey, these guys are retraders. So,
and I've thought about like running another contract saying that, okay, whatever you're about to lose in commission because of the retrade, we're just going to pay you what you would have gotten before. And it'll just come from us, and it's not going to come from the seller. Yeah. So you're the same. You will be maintained whole no matter what.
If you keep the purchase price the same and you ask for a credit, the seller is going to get the same commission. Commission's based off purchase price on most contracts. So if you keep the purchase price the same and work a credit in, then that works. And maybe what you do, and just shooting from the hip here, if you get an estimate for replacing the 2 sewer lines and it's $400,000, maybe you go to the seller and say, hey, look, $400,000 is what it's going to cost us to replace these lines. I know you didn't know about it, or you probably would have replaced it yourself. Let's split the difference, and just say, it's going to cost us $400,000, but would you be willing to go halvesies with us? Because if we back out of the contract, you're going to have to fix it. And if we back out of the contract, you're going to have to disclose it now. So there is some leverage that you have right now by disclosing this to the seller, because now it's going to be something that he has to disclose to the next people. I mean, it's all in the contract. So you do have a little bit of leverage, but one option would be just halvesies. Hey, it's going to cost us X amount. We got 3 different bids from 3 different plumbing companies. Here's the average. Yeah.
Sorry, we're over here like, that's a really good idea.
Yeah.
We actually just did that on a property, much smaller figures, but it ended up working. We actually went to them and we gave them the lowest bid of a number of different bids, and we said, well, we'll go more than half on this. So we kind of yielded a little bit more than, I guess, half, but they ended up agreeing to it.
Yeah. And that's going to be a lot more palatable to the owner. But once again, you strengthen your position by being willing to walk away. Yeah. I mean, if the owner knows that he's going to have to replace that, if you walk away, then it's either you give us a $200,000 credit right now, or you pay $400,000 after we walk away. Which would you rather? But anyway, I think that's good luck.
Thank you.
Yeah, I mean, it's fun. It's fun, but can be stressful. Hopefully you get a little bit of traction. And I mean, have a heart to heart with the broker too, and tell the broker, this is a deal killer. This really is a deal killer. Show the broker your numbers and say, this is where we were before we found out about this. This is where we are now. This is a deal killer. And then have the broker go to bat for you. The broker wants the deal to close. All right. And so if you put it all on the table to the broker, and just say, we feel we need to have a 15% average annual return to be able to attract investors, or whatever that number is, and be able to fully fund this deal. Okay. Throwing this into the mix. Now we have to add an extra $500,000 to our CapEx budget, to our capital raise. It dilutes the returns to the point to where we're now at 12%. Like, I don't think we can get investors at 12%, and then say, but we really like this deal. If the owner could come down, 200,000, out of this $500,000 CapEx line item, if the owner can come down 200, we can still make things work. Okay. Have that conversation with the broker, and then let brokers do what brokers do. The broker is going to get on the phone with the owner, and the broker is going to want to close it. The broker doesn't want to take it back to market because that's his reputation on the line, or her. But okay. But yeah, and I saw Mark's interview with Bo Beery. That's another really good. Bo Beery's book is like super good too. But
awesome. Thank you.
Yeah. But yeah, I mean, never underestimate the broker's interest in the deal. All right. The broker only gets paid if you guys close. And if you guys don't close, he's got to take it back to market, find a new seller, or put a new buyer. Yeah.
Okay. Awesome. Well, Jason just pulled up our team meeting, so I'm taking this information straight to them.
All right.
So thank you.
Yeah, you're welcome.
All right. Have a great night.
I only charge 10%. No,
oh, okay.
Yeah.
Bye,
guys. Bye. Yeah.
Awesome. Well, Brian, if no one else has any question, I just want to thank you again. You dropped a ton of gems. Again, starting from networking to team building and mindset. It was just a compilation of things that you shared with us, and I know for sure, as I said, I took a pages worth of notes that I will definitely apply. So thank you again for your time. If anyone wanted to get in touch with you, how would they go about doing so?
I'll drop my email in here, Brian. I've got a Calendly link too. Let me Calendly link really quick. Give me a second. There it is. Oh. Copy link. So there's my email address. If you just want to set up a call, I mean, anybody who's in this meetup, and I don't care if you send this out to your list, but they can set up a call with me if they're interested in anything. And especially if you're interested in Tribe of Titans, that's probably the best way to access me, is to be a member of that club. So.
Awesome. So everyone, I do want to thank you so much for taking the time out your schedule. I know it's a little over the initial time, but again, I'm pretty sure it was very fruitful. We all have learned from Brian. I mean, I've heard Brian's story from various meetups, but I for sure learned something new, and that's what I aim to do. I always aim to learn something new, and pay it forward, and also just implementing it to grow my business. So definitely this was my 2K night. So Brian, thank you so much for your time, sir. I appreciate everything you've done. And again, thank you for your service, and enjoy retirement. And I definitely look forward to seeing that 630 unit, 37 AUM double in the next couple of months for sure.
Yeah, you and me both. We're trying. Gosh, it's getting hard though. But yeah, we'll get it. We'll definitely get it. Thanks though. Appreciate it.
No problem. All right, and this will be it for tonight. I will just turn off this recording.